Welcome back traders, what's going on? In the previous lecture, I talked about the price action and strategies based on the price action charts. Now from this lecture on to the next couple of lectures, I will be talking to you about one of the most important topic of the price action based technical analysis, which is the support and resistance level. Support and resistance are one of the most effective and reliable concepts of trading the securities to analyze the market as a technical analyst. To learn very well about the support and resistance level on a price action chart, you first need to learn the basic concept of the demand and supply theory. By the time you become familiar with the basics of the demand and supply theory, you will come to realize the true meaning of the support and resistance level on a price action chart. So in this lecture, I will give you a brief explanation about understanding the demand and supply on a price action chart. So let's discuss about what the demand and supply really means, which are the main force to execute the market. Demand in economics is the quantity of a product, commodity, security or a service that people are willing to buy at a certain price. For example, when you want to buy a jar of milk for $5, then you have created the demand of milk to be sold at the price of $5. On the other hand, supply is the amount of something that firms, consumers, providers of financial assets or other economic agents are willing to provide to the marketplace. For example, for the demand of a jar of milk, a farmer would be willing to produce or supply a jar of milk at the price of $5. Demand and supply both has the inverse relationship of between the price and quantity, which called the theory of demand and supply. According to this theory of demand, when the price of a product, asset or security falls down, the quantity of buyers will increase. That means if the price of a product is low, then the demand will increase and more people would be willing to buy that product at the lower price. On the other hand, if the price of a product is high, then the demand of that product will decrease and hence less people would be willing to purchase that product. For example, if the price of milk become low or cheap, then the demand of milk will increase, for which more buyers would be willing to buy milk. On the other hand, if the price of milk become high or expensive, then the demand of milk will decrease, for which less number of buyers would be willing to buy that milk. On the exact same but opposite way, according to the theory of supply, when the price of a product or security rises up, the quantity of sellers will increase. That means if the price of a product is high, then the supply of that product will increase, while more people would be willing to produce and sell that product for higher price. On the other hand, if the price of a product is low, then the supply of that product will decrease because no one would be willing to produce and sell a product at lower price. For example, if the price of milk become high or expensive, then the supply of milk will be increased since the farmers would be willing to produce more milk to earn good amount of money. On the other hand, if the price of milk become low or cheap, then the supply of milk will decrease because no one would be willing to produce milk to sell it at the lower price. So that's the basics of the demand and supply theory. This theory can be applied in almost all the fields where the buyers meets the sellers in the market. Now let me explain this theory more in the perspective of trading the securities. So let's say in a price action chart of a security, the current price is at the high or peak of the market. So the high price will create higher supply as because that higher price will attract more sellers to supply or sell at the market. While on the other hand, according to the inverse theory of demand and supply, this higher price will create a low demand for the buyers and hence discourage them to buy at the expensive price. So here, the number of the sellers or the suppliers will increase and the number of buyers will decrease in volume. And for that extreme selling pressure, the market price will start to decrease as because the price of a product depreciates over time if there are more supply of a product than the demand of that product in a market. So if the price of a product or security become low or cheap, then that would decrease the supply of that product or security. While on the other hand, the demand would be increased because more buyers would be willing to buy that product or security at the lower market price. And that demand will cause an extreme buying pressure on the market, for which the price will rise up and then again the price will be depreciated over time, since the rising higher price will attract more sellers to come into the market, as the higher price creates higher supply. So in summary, when price falls down, then the demand or buying pressure will increase over the sellers. So that increasing buying pressure will lead the market to rise up, and then over time the demand of the buying will decrease while the supply of the market will increase in volume. So that selling pressure over the buyers will cause the price to fall down, and then again at a certain price level, when the price will depreciate on the market, that will create more demand and less supply, for which the market will rise again because of the extreme buying pressure. So this loop of the demand and supply, or the trades from the buyers and sellers, continuously runs in the market. So in this course, every time I will mention of the bottom or swing low point, it actually means the demand of the market. On the same way, the tops or swing high points will be referred as the supply of the market. So that's the basic of the demand and supply on a price action chart, which is the main force to execute the market of a security. In the next lecture, I will talk about the support and resistance levels in terms of the demand and supply of a security. So that's all for now. We'll see you in the next lecture. Till then, have a nice day and goodbye.